Good morning, traders. It's the 16th of January. I'm Joe Neighbour from Signal Centre. Just me today. Steve's taking a holiday for a couple of weeks, so you just have to put up with me for the next couple of weeks, sadly, and I'll do my best to cover as many markets as possible and engage with you guys on these streams. If you've got any markets that you're looking at or would like some help with or would like some opinion on, please feel free to post them up, and I'll do our best to cover all of those. Hope everybody had a great weekend. I certainly did. The mighty Arsenal beating Spurs yesterday. 8 points clear at the top of the league. Very, very happy indeed. Right, let's get into the latest headlines then, shall we? What's moving markets over the weekend, and what can we expect for the week ahead? So first up, the US consumer inflation expectations declined. The University of Michigan Consumer Confidence Index strengthened to 64.6 for January from a previous reading of 59.7, and that was also well above the consensus forecasts of 60. There was significant improvement in the current risk conditions component and a small improvement in the expectations component. The one-year inflation expectation index retreated sharply to 4% from 4.4%. while the 5-year index edged higher to 3% from 2.9%. So, getting that back down into levels that are a lot more acceptable for us all. We've seen some choppy trading in the Treasuries. On Friday, the 10-year yield held below 3.5%, but was unable to hold below 3.4%. So pretty choppy all in all. Although risk appetite in general has held quite firm, the decline in the US expectations triggered further hope that the Fed can adopt a less hawkish policy. And there was also fresh optimism that there would be a rebound in the Chinese economy, which would underpin a global outlook for equities, and they held firm on Friday. We've also seen further yen demand. The yen gained further support against major crosses, with speculation that the Bank of Japan would shift to a less expansionary policy at its latest decision. That will be due on Wednesday. So we saw dollar yen post fresh 7-month lows at 127.25 before a recovery. In terms of the CFTC data, this is where positions are published effectively on a weekly basis. We saw that yen gained further in the data, recording a decline in short yen positions to near 35,000 contracts, close from a close previously of 47,000 the previous week, and that's the smallest short positions that's been held since late August 2022. Today, we've got the Bank of Canada survey for business outlook. That'll be released later today on inflation expectations, going to be watched particularly closely there. And we also got some Chinese data due in Asian trading on Tuesday, including GDP and industrial production, which will also be important for overall risk conditions. Okay, so it's been a pretty good weekend for the cryptocurrencies. We've seen Bitcoin continue to rally, following on from the moves that we saw last week. So let's take a look at the charts there and have a look at how that is shaping up on a daily time frame. We can see here it's been a dramatic move higher in recent days, going back really to what started on the 8th of January. We can see the move has accelerated to the upside, but come up just short of the first level of resistance that we've got on the chart here, which is at 21,555. We've got a low in here prior to this impulsive move lower, which I always like to target for resistance and support levels. We can see that the coin tried to hit and go through that level back here in November, but failed. And now we're back at that level again after a very sharp move higher. Now, have we formed a bottom here? Well, I'm not entirely convinced just yet, because if we look at the daily chart, we can still see that the sequence for trading is for lower highs and lower lows. So we need to keep that in mind. We did see support hold at this level here at 15,512. We saw it touched on a couple of occasions back in November. So maybe we have formed some sort of bottom, but I think we need to see more confirmation of that, preferably some sort of rounding sort of price action taking place. So for me, I think this is the key level, 25,338. If we can get above that, then maybe we are in the process of forming a major bottom in cryptocurrencies, not just Bitcoin, and we can start looking for higher prices. But no doubt this recent move higher has been very good for the crypto enthusiasts and offers some hope, but I still feel that there is much needed upside price action required before we can get overly bullish about this for the time being. But certainly the initial signs are quite good. So let's take a look at commodities now. Having a look, first of all, at the precious metals, silver and gold. We can see here that silver prices have stalled a little bit in recent weeks. We can see there's quite choppy price action in and around this zone here. I've got resistance labeled on my chart at 24,895. That also marries up with a 78.6% Fibonacci retracement of this entire move here. We also can see that the measured move of this bottom pattern actually comes in at pretty much the same level. So we've got kind of three levels there to target on the upside. So I think if you are long of silver or these precious metals, maybe considering trimming some exposure into 24.87 could be a pretty good approach really with this, and maybe look for a bit of a pullback and see how prices react having hit that level. So all in all, looks pretty rosy, but we are encountering some pretty stiff levels of resistance following a very sharp move higher. So we may want to consider trimming some there as well. And if we'll take a look at the US dollar in a moment, because obviously that's going to be quite crucial in what precious metals do next. We've seen the dollar move substantially lower, and therefore there is potential for a bit of a rebound on that, and that could obviously harm the precious metals. Let's take a look at gold. We can see prices have continued to move higher following the completion of this double, maybe even triple bottom pattern that we formed. We broke through resistance at 1735, had a nice technical pullback, and then prices have roared to the upside. The 78.6% fib comes in at 1972. We've also got some resistance here to target. So let's see how prices, if they get there, react at that level. Again, it could be a reasonable level to consider taking some profit. And again, what the dollar does next is going to be all important for this particular market. Let's take a look at natural gas. As Steve's been talking about for a while, there was a major level of support around 3.5. Bit of a mess on the chart here, but we've got two head and shoulders tops. You had a smaller one and a larger one. The larger one completed. The measured move of that target is the measurement from the head down to the neckline projected lower, comes in at 285. So we've failed to hold this support, and prices now appear to be finding resistance at that previous support. So we may see prices continue to move lower, down ultimately towards our target of the head and shoulders top, which comes in at 285. So that looks as though it's remaining under pressure. Let's take a look at some of the oils. We can see here this continues. This is Brent, continues to trade in a downtrend line, downtrend channel. We can see that there is some resistance that's forming in and around this region here, which is around 86. So looks as though it's going to remain under pressure for the time being, and we can maybe expect to see lower prices in oil. If we can get above that 86 line, then maybe we'll see a little bit of a corrective move to the upside, but overall the trend remains bearish for now. Similar kind of situation with crude. We can see that prices are fast approaching the upper barrier of the downtrend line. So let's see how we react to that level. 81.14 is the level I've got there. A couple of requests coming in for currencies. I will get to those shortly. So we're going to be looking at New Zealand dollar, US dollar, Aussie yen, and sterling yen, as well as the other majors as well. So bear with me one moment, guys. Let's just finish up on the commodities. Let's take a look at copper. We can see here this is looking pretty nice indeed. So we formed some sort of bottom. We've broken out through resistance at 396 and above the 4037 level, and are moving to the upside. So from a technical perspective, we'd be looking for maybe some sort of pullback into this newly formed support around 4037, maybe down to 396. And then ultimately looking for higher prices there. This looks pretty robust indeed, and quite strong, given the completion of this kind of bottom pattern that's played out in copper. Okay, so let's move on to the currency, shall we? Let's have a look at how they're shaping up. So US dollar, let's start there, shall we? As we often do. So prices continuing to gravitate to the downside following the completion of this head and shoulders top. We saw that complete back here in early December. We then saw a retest of the neckline back here in early January before prices then continue to move lower, taking out this horizontal support at 103.45. Interestingly enough, we've got a 50% fib level as highlighted by that yellow line there at 102.45. And prices have attacked that today and look to be forming some sort of reversal at that level. Potential for a bullish hammer to form here at that level, which would indicate that there is strong support here and the buyers are willing to step in. Obviously, the dollar has had a pretty substantial move lower. Sentiment towards the US dollar very negative as well. So when we get in those kind of frames in the market where negativity in terms of sentiment is at an extreme, that can potentially indicate a bit of a turnaround. So that's why I was talking about those levels on silver and gold. They've rallied substantially. The dollar's fallen substantially, but the dollar does look pretty oversold at the minute, and we are finding some support at this 50% fib level. So maybe we could see some sort of corrective move take shape on the US dollar in the short term. Okay, let's take a look at Euro US dollar before we move on to some of these other markets that have been requested. Let's look here. We can see prices broken out of this bullish flag, moving higher, coming up just shy of the 50% fib level, which is coming in at 109.42. So it'd be interesting to see if at all we get some reaction at that level. We seem to be rolling over a bit to the downside in early trade today, but obviously there's a long way to go in the session. Let's take a quick look at cable as well. We can see here, following the break of this wedge pattern, potentially a bullish flag or pennant formation, prices have moved to the upside, but early in trade today, we've seen a pretty strong rejection. We can see, looking at this candle, although very early in the session, we've made highs up to 122.90, but now we're back down at the lows of the session at 122.14. So maybe a bit of rejection into that level of resistance that we've got there. Be interesting to see how this plays out between now and the close of business later on today. Okay, let's get on to these requests then, shall we? Let's take a look at Aussie yen first of all. Taking a look at the daily, I've had this marked up for a while now, a head and shoulders top on the Aussie yen chart. Prices rallied into the neckline last week and failed, posting this really substantial red candle, engulfing all of the previous day's gains into the neckline. So for me, that's pretty bearish. Ideally, I'd like to see a retest of the 90.99 level, 91.00 level in order to get short. But for me, the bias is bearish here and I'm looking for lower prices. In terms of the measured move of the head and shoulders top, I think ultimate price targets on the downside here are around 83.10. So still looking bearish on this and we'll be looking to sell into rallies on Aussie yen. That's my outlook there on the daily. Let's take a look at New Zealand dollar versus the US dollar. So prices were trapped within a bullish channel, as we can see here. We then saw the breakdown on the 22nd of December. Prices rallied to retest the underside of the channel and continue to sort of butt up against that a bit, but are failing to get any real follow through on the price. So I've got resistance level here at 64.01, which continues to prevent prices from moving to the upside. If we take a look at prices in the much shorter term, we can see that a bit of a range has formed here between 64.01 to 62.30. So from a risk reward perspective, there could be some decent opportunities on an intraday basis if you're looking to sell here, placing stops above the highs that we've posted already early in this session, targeting a move back down to the support zone. So that actually could be a pretty good candidate for my gun to the head trade when we get to that at the end of the stream. What do I feel about this? I think while we're below these resistance at 64.01 and 64.68, which is this black line here, then I still feel there could be potential for some sideways price action, some choppy price action, and potentially some opportunities on an intraday basis. Yet to make my mind up really on where I feel this is going on the longer term. Of course, a lot of that is going to come down to what the US dollar does next. Let's take a look at Euro CAD. Let's see how that's shaping up. So price has been pretty strong here, as we can see, following the breakout of this resistance back here at 37.62. It then acted as support on a pullback and prices have roared to the upside. We have hit some resistance at 146.06. We can see going back really to this time here, which was in July 2021, where it acted as a support. Then we saw the breakdown. Then it acted as resistance on the reverse side, and we can see it's done that on two previous occasions and now potentially a third here on the 15th of December. So while prices remain below that level, I think my bias would be maybe looking for lower prices, but clearly the trend is pretty strong at the minute. Maybe we've just seen some sort of consolidation or continuation pattern that's trying to form here. But I think while we've got this big barrier of resistance at 146.06, then I think there is potential maybe for some sort of deeper correction here on Euro CAD. And when looking for corrections on markets, the fib tool is always a very handy one to look at, because a sort of natural correction on any kind of market, you will often find it pulls back to at least a 38.2% fib level. So that will be down at 139.39. So maybe selling into these resistance levels here, targeting that would offer some pretty substantial risk reward. Of course, if we get a closing break above this 146.06, then that would really invalidate the bearish opinion on that. And maybe we have completed a really large bottom and higher prices could be seen over the medium term. So the other market I'm going to check out is sterling yen. We can see here on the daily that prices have, for me, formed some sort of top, really. It looks like prices have been moving sideways and a top has been put in place here. Obviously, we've seen substantial yen strength as a result of them potentially changing policies. We'll get confirmation of that later on in the week on Wednesday, but markets seem to be pricing this in. We can see that prices were trading in a range here between 169.09 to 163.06. We saw a breakdown of that. Prices have been unable to retest that, and prices have continued to move lower as we trade in a sequence of lower highs and potentially lower lows if we can get below this low that we posted on the 3rd of Jan. I'm still looking for lower prices, but I'd like to be selling higher up, and I've targeted 160.48 as a level to potentially aim to get short at. But for the time being, maybe there is some support forming around this zone here at 155.35. So for those that are looking for speculative trade ideas, maybe buying close to this level and targeting some sort of rebound could be a reasonable strategy. Let's take a look at some fibs actually on this, from the low that we posted in September to the high that we posted in October. We can see we're through the 61.8% fib. That really didn't offer much in terms of support. Lower down, we've got a 78.6% fib at 153.66. So maybe if we do get through this level at 155.35, then we could be headed down to that 153.66, which is the 78.6% fib level. Okay, hopefully that's covered off a few. Let's just take a quick look actually at dollar yen, because we've seen prices break down here. It continues to trade within this bearish channel. Any advances to the upper end of the channel have been sold into, and we've taken out these major support here at 130.39, and prices are continuing to move lower. So any pullback into this level here could represent a fresh opportunity to sell, but obviously it's a big week for this market. Not just that dollar index is at a pretty interesting support, that 50% fib level, and sentiment remains very bearish, but because we've got this key event on Wednesday, which is the Bank of Japan policy decision, and that could be pretty significant and create some significant volatility in anything linked to the Japanese yen. Okay, let's take a look at some indices, shall we? They've been pretty strong indeed of late. Let's take a flick through a few of them, starting off with the ASX 200. So this is the top 200 stocks in Australia. We can see here that prices formed what looks to be a double bottom. We broke up through that resistance. We did see a pretty aggressive pullback, but it traded within some sort of channel formation, and prices have continued to move to the upside. So that looks pretty strong indeed. We are facing resistance here at the previous swing highs that were posted in early December at 7382. So it'd be interesting to see what we can do today. If we get a swing failure there, then maybe we could see a bit of a pullback in the ASX 200 following that sharp rise that we've seen. Some of the other markets look quite interesting. Not one that I trade very often, or if at all, to be honest, but the Swiss 20, Switzerland 20, we can see an interesting inverse head and shoulders bottom pattern has formed here. We've broken through resistance at 11,230. We've seen an attempt at a pullback on that as well, and prices are holding above it. So that looks pretty interesting from a bullish perspective, and kind of indicative of what we're seeing elsewhere in Europe as well, really. This is the Euro Stoxx 50. We can see that prices have smashed through resistance here around 4,000 and continue to move higher. Early indications today are that we're stalling a little bit, and that wouldn't be a surprise given that we've seen such a substantial rally higher in recent days. So a pullback potentially to test that newly formed support at around 4,000 can't be ruled out. But if we get some stabilization of price here and some acceptance at those levels, then that could present a pretty good opportunity to buy. Take a look at the DAX. We can see here that prices have also completed a bottom, rallying through resistance at 14,812. Again, stalling a little bit, coming up just shy of a 78.6% fib level. So be interesting to see if we get a pullback into support here and what kind of price action we get once we pull back. But overall, that looks pretty bullish. Onto the US markets, not really seeing the same sort of price action in the US markets. We've still got a downtrend here in S&P 500. We're still seeing lower highs. So that is a concern. We're not seeing the kind of bottoming patterns that we're seeing in the European markets at the moment. So that is a bit of a concern. So no real thoughts on this at the moment, other than it still looks quite bearish. And I think we need to see a little bit more from this market before we can get too excited. Really, the only of the US markets that's looking mildly bullish is the Dow Jones, but this is, of course, is only made up of 30 stocks as opposed to the S&P 500, which is made up of 500. So we want to really focus on the broader indices when trying to assess the strength of these markets. But the Dow's into resistance here at 34,295. We did have a little bit of a shoot above that last week, but failed to hold above it. So yeah, it's into some pretty significant resistance here, and we need to see some pretty substantial closes higher above this 34,295 level before we can get too excited about that. And the Nasdaq's a similar situation. I mean, that's not even at the downtrend resistance like the S&P 500 is. So the tech is really lagging. We've got earnings season coming up pretty soon. So that could really be quite decisive as to what is the next move for these US markets and whether or not they're going to continue to move higher. One more indices to look at before I actually take a quick look at the VIX, because there's some interesting going ons there. The FTSE is leading at the minute, really. It's the standout market, which it hasn't been for years, to be quite frank. We've broken through some very significant resistance here at 76, 78, which we can see if we look over to the left-hand side, has prevented markets moving higher on a number of occasions, really, going back to 2019. It's interesting, actually, that the UK market is still quite shy of the previous all-time highs. In the post-COVID rally that we saw in the US markets, obviously they all went on to go and make new highs, but the FTSE never did. It really lagged behind. 7903 is in focus now. This is the previous high that we posted prior to the pandemic back in May 2018. And we are running in hot to that level. So it'd be interesting to see if at all we get any reaction at that level. I think given the sharpness of the move higher, it would be expected that we'll see maybe some profit taking, some sort of stalling at that level in the short term. So if you have any exposure to UK stocks, and at the moment, so they are running pretty hot, you may want to consider taking some profits off in the coming days if we approach that level. S&P volatility index, the VIX. So some of you will be familiar with this. The reason I wanted to bring this up is because it posted a pretty significant low last week, which indicates that volatility has obviously dipped off and that people are quite sort of happy with where markets are at the minute. So arguably we're approaching a kind of an extreme reading here. And given that the S&P, for instance, is nowhere near its highs or not showing really any indication of turning round, I think if we get any spike in volatility, that could indicate that markets are going to start heading lower again. And the fact that this is broken down indicates that there's a bit of acceptance here of the levels that we're at with volatility, and it could be quite a worrying sign. And given that we've also seen that support potentially found on the dollar index at the 50% level, maybe we're in for a bit of a turning point in some of these markets this week or in the next couple of weeks. So I think that's quite interesting and something just to keep in mind, that maybe volatility could be set for a return in the coming weeks on the equity markets. Okay, let's move on then from that. I don't think there's any further requests. I've just been through the FTSE, so hopefully that was fine. Let's move on to the gun to the head trade, shall we? So obviously it's only me this week, so it'll only be one trade that we're posting. And just for those that are new here or haven't watched before, basically Steve and I, my partner, who's usually on the streams with me, we pick trade ideas live on this video each day. As if we had a gun to our head, what would we trade right now? Each of the ideas that we come up with must have stops and targets. They're all placed at market. We upload them to our TradingView profile, which is signal_center if you want to check that out. And the ideas will expire at 9 p.m. UK time or when the stops or the targets are hit. As of this year, we've actually been running a live account. It's only a small one, £2,000 we started off with, and we risk 1% of capital each. So I'll risk 1% of the capital on a trade. Steve will do the same. Obviously, this week and for the next week, I'm only going to be risking 1% because it's just going to be me doing it by myself. In terms of how we're doing so far, it's been pretty mixed, but we've got the live account here on our TradingView account. We're going through a WANDA. So these ideas basically are linked to an MT4 or MT5 trading account, depending on where you trade. So what we've actually done is added an expert advisor to our main MT4 account. So what that does is actually close off all the trades automatically for us at 9 p.m. UK time. It's just something that we've always done. We close them out. We don't carry any overnight risk, and obviously we don't incur any other charges like overnight fees by doing that. So it keeps the cost low as well. And the hope is that between now and 9 p.m. UK time, so just over 12 hours, we can try and hit a winner on the markets in that time. So where am I going to go today? Well, I think due to the requests that I got, the one that really stood out in the markets that I looked at was New Zealand dollar versus the US dollar. So this is what I was looking at on the daily chart. We can see here that prices were trading in a bullish channel. We broke out to the downside in late December, and since then prices have really struggled to regain or get back inside that channel. We've got a pretty significant resistance level here at 64.68, but also in the more shorter term at 64.01. And if we look at the daily price action today, I know it's very early in the session, but we've made a new high above these previous highs that we can see here, the wicks of these candles, and we've rejected pretty aggressively on those. So let's have a look at the intradays and see if we can set up a trade idea here and try and get a bit of a winner under our belts to start the week. So let's just replicate that range that we're talking about on the daily by looking at it on the hourly chart. So that's the resistance, and we've got support down here. So we've got a nice little range set up. Obviously, we're at the upper end of that range at the minute. We've got a lot of white space to potentially drop into down here. So my trade idea today is going to be to sell at the current price. I'll get this trade mapped out before I put it on, just so we can visualize it. It's currently trading at 63.75, so I'll do my best to get in close to that level. Ultimately, this is going to be my target into these support levels down here. That's at 62.00, so a nice round number to target. I'm going to go quite tight with my stop above the highs that we posted early on in the session. That was at 2 a.m. UK time, so that's going to be at 64.29. So let's get this on. Can I do that by right clicking? Let me trade that? No, so I'm going to have to do that. Right click, let's get a trade on. I haven't actually traded through TradingView previously, so a bit of a challenge for me. Right, why isn't it letting me do a trade? Do I have to click up here? What will that do? Bring up a deal ticket? Non-tradable. Okay, am I on the wrong account? Okay, I'm going to have to sort that out in a moment and get that trade on. I may have to do it directly through a WANDA on the MT4 account, so I'll do that. I'm going to go short of it, so obviously my prices might vary slightly from where they're currently trading at, but I'm going to be selling New Zealand dollar versus the US dollar, and I'll get that trade idea published up to the TradingView profile once I've done it. Oh no, it's going to let me do it now, is it? Right, okay, let's have a go then. So I've lost all my levels as a result of that as well. Let's get that on. Was targeting 00, weren't we? 62.00. Okay, so take profit is going to be at a price of 0.6200, and my stop loss is going to be at 64.30. I'm going to risk 1% of our capital. So that's a risk reward ratio of 3 to 1. So let's sell that, and we can see that that has been placed. We've got the position live there. So we're on. That was easy enough. Right, okay. Let's look at the data for the day ahead. What's due out today? We can see at 3 o'clock UK time, we've got Bank of England Governor Andrew Bailey's testimony. At 3:30 UK time, we've got the Bank of Canada Outlook survey. And then tomorrow morning, we've got Chinese GDP, which is at 7 a.m. UK time, as well as some labour market statistics from the UK, both of those due out at 7 a.m. UK time. The big numbers this week, Beyond tomorrow and today, we've got the Bank of Japan policy decision that's due out on Wednesday, and we've also got the latest reading on UK inflation on Wednesday as well. So a few bits to keep us interested this week, and that is pretty much that for today. So yeah, it'll be myself only this week with Steve off. I hope everybody has a fantastic week, and I will see you all tomorrow morning. Thanks for taking part, guys, and speak soon. Bye bye.